Assalamualaikum warahmatullahi wabarakatuh. Good morning, good afternoon, good evening. We're from Group 7, Risk Management and Good Corporate Governance Class Q. Will be present our final group assignment, Risk Management Evaluation and Good Corporate Governance of PT Pakuwon Jati terbuka. So this is our group member. The first one is Firda, Galuh, Fakhri, Laras, and also Saviera. Next will be presented by my friend.
Okay, the outline is chapter 1 is company profile, chapter 2 is identification and assessment, chapter 3 risk mitigation and risk assessment, and chapter 4 is corporate governance. Next. In chapter 1, company profile. The first one is subsector definition. In this study, the sector that will be analyzed are the property, real estate, and building construction sector. The property, real estate, and building construction sector hold an important role in the economy and development in Indonesia. The sector is also one of the indicators to assess the development of a country economy. In the property, real estate, and building construction sector, there are several subsectors, and one of them is the property and real estate subsector. The subsector that will be discussed is the property and real estate subsector. Real estate is the term that refers to land, physical building, and other inherent research. One example of a company in the property and real estate subsector is PT Pakuwon Jati Tbk or Pakuwon. PWON business activities based on the company article of association. General business activities of the company consists of a commercial division, which includes shopping center, rental segment, retail, office and service apartment, hospitality division in the form of hotel, as well as the hospitality division residential consisting of development, vertical high-rise, and horizontal house land. Next. Company profile. PT Pakuwon Jati was established on September 1982 based on notarial deed number 281 prepared by Kartini Jati S.A. Notary in Jakarta. PT Pakuwon Jati has become an inseparable part of the property industry in the country for almost 4 decades by presenting company portfolio in various key property sectors such as retail, residential, commercial, and hospitality. Next. The vision is together we grow, and the mission is to become the leading strata retail shopping center developer in Indonesia, to develop the best super block and township toward better living quality, to become the best working place in the country property industry, and to optimize the return on investment for our tenants and buyers. Next. This is the table of company current condition. The company financial position in 2020 remain in positive performance contributed by the efficiency policies implemented to respond to current development due to the pandemic in major cities in Indonesia since the end of the third quarter. Asset value of 26 billion in 2020 or grew 1.4%, and company liabilities is 800 billion. Company equity was 70 billion, and many others. Next. This is stock performance of PT Pakuwon Jati. From the picture above, it can be seen that the performance of PT Pakuwon Jati is stock price is 2019 and 2020. For overall price is still higher in 2019. This is because the 2020 there were COVID-19 pandemic. However, in second quarter of 2020 trading volume was at highest reaching 9 billion. From table above, it can be seen that highest stakeholder of PT Pakuwon Jati of December 2020 was out by PT Pakuwon Jati at 16.8%.
Okay, so now I'm going to tell you about risk identification and assessment. Next. So 2.1 risk identifications using formal method. The formal method used to identify risk is the analysis of the company's annual report for 5 years or 2016 to 2019. The annual report of PT Pakuwon Jati Tbk always provides information related to the main risk faced by the company. These types of risk are further analyzed to find specific risk agent, risk types, and losses given. Based on the annual report for 2016 to 2019, obtain a summary of the comparison of the main types of risk each year as follows. You can see the risk code R1, R2 until R15. Okay, next. So 2.2 risk identification. Risk identification is the process of determining risks that could potentially prevent the program, enterprise, or investment from achieving its objectives. It includes documenting and communicating the concern. PT Pakuwon Jati conducts a mapping of types of risks that have possibility to present obstacles to all business line being carried out. Through this process, the company, through its risk management mechanism, proactively makes various efforts in assessing various types of risk in order to prepare various anticipatory and control measures to map risk according to the possible impact on the company are described as below. Next. So I will tell you about the risks that are available in PT Pakuwon Jati. The first one is economic risk. The second one is operational risk. The third one is political risk. Next. So the next one is competition risk, currency risk, and credit risk. Next. After that, there are liquidity risk, and the last one is capital risk. Next. So 2.3 qualitative assessment. Qualitative risk analysis involves in identifying threats or opportunities, how likely they are to happen, and the potential impacts if they do. The results are typically shown using a probability or impact ranking metrics. This type of analysis will also categorize risk either by source or effect. This assessment expresses likelihood estimates in non-numerical terms such as high, medium, low, or very low. This approach is suitable for majority of risk assessment and is routinely used for decision making. In some situations, a quantitative approach might be considered desirable as adjunct to qualitative assessment. The process of risk assessment begins with identification of the probability level of the risk event and the significance level of the impact based on a qualitative assessment. The result of the identification will be directed into a probability and impact matrix to determine the area of intersection. Each pointing box in the matrix has a different color indicator, where green indicates low risk, yellow represent moderate risk, and red represent high risk. The following is the result of the identification of the probability impact and risk level of PT Pakuwon Jati. Next. Yeah, so you can see the qualitative assessment. There are many colors, red, yellow, and green to every risk. Yeah, next. So here are the impact metrics. Based on the metrics above, 3 types of risk level classification can be obtained. High level of risk, unhealthy cash flow, rupiah exchange rate position, influence of business rivals in locations close to company's business area, fluctuations in foreign currency exchange rates, possibilities of counterparties to default in fulfilling their contractual obligation, and for the medium level risk, the level of people's purchasing power, barriers to physical systems or assets due to disasters or natural or human error, changes in political direction, growth of similar business line, not yet maximal return for shareholders, and delays in the implementation of programs related to investment by the government. The next one, the green level risk, low level risk, changes in the political situation, changes in the regulations or laws, conditions at suppliers, conditions related to the contracts, possibility of being exposed to market interest risk associated with major bank loans that have floating interest rate. And the last one is not implementing a liquidity risk management framework. Next. So 2.4, semi-quantitative assessment. Semi-quantitative risk analysis is a risk analysis methodology that is characterized by speed, simplicity of design, lower requirement on the input data, and the smaller demands on the resources include some degree of quantification of consequence, likelihood, and or risk level. Semi-quantitative methods are divided into several types, such as fault tree analysis, event trees, and bow tie. In this research, the risk assessment method applied is a semi-quantitative type of event trees. The assessment that we use for PT Pakuwon Jati is using event tree method. Next. So the first one, R1, event trees R1. You can see the probability that the company will stop operating 0.6 multiplied by 0.9 is 0.54. And the probability that the company will not stop operating even though the company has defaulted, 0.6 multiplied by 0.1, 0.06. And the probability of not paying company, 0.4. You can see yourself the even trees R2. Next. So even trees R3, the level of public purchasing powers, probability of sales drop 0.8 multiplied by 0.9 is 0.72, and the probability of sales not dropping despite the COVID-19 pandemic, 0.8 multiplied by 0.1 is 0.08, and the probability of not having a COVID-19 pandemic is 0.2. And the R4, probability of bad company reputation, 0.5 multiplied by 0.3 is 0.15. And the probability of a lack competence on the board of directors, even though there is no bad reputation in the company, 0.5 x 0.7 is 0.35. And probability of no lack of competence on the board of directors, 0.5. Next. So for R5, changes in law, suppliers, and contract, probability of bad company reputation, 0.4 x 0.7 is 0.28. Probability of inconsistent treatment of contracts, regulations, laws, even though there is no bad reputation in the company, 0.6 multiplied by 0.3 is 0.18. And the probability of no inconsistent treatment of contracts, regulations, or laws, 0.5. And for R6, obstacles or natural human error, the probability company's operational processes are not optimal, 0.5 multiplied by 0.7 is 0.35, and probability of low skill and performance of employees even though the company's process activities are optimal, 0.5 multiplied by 0.3 is 0.15. Probability of no employee skills and performance, 0.5. Next. And for R7, changes in government political direction, 0.5 x 0.8 is 0.4, 0.40. Probability of regulations that do not support the business climate but are not influenced by bad government regulations is 0.5. Multiplied by 0.2 is 0.10. Probability of no regulations that do not support the business climate, 0.5. Probability of low public trust, 0.3 x 0.6 is 0.18. Probability of disappointment with the government caused by delays even though there is no low level public of trust, 0.3 x 0.4 is 0.12. Probability of no disappointment to the government caused by the delay, 0.7x. R9, maybe you can just next to the last one. Yeah, inventories R11, R12 next. R13, R14, yeah, next. So here is the last inventories, R15, which is the company is unable to maximize return for shareholders. Yeah, thank you. Maybe the next one can be explained by my friend Galuh or Fakhri. Thank you.
Okay, next I will explain about risk mitigation and register. First is about risk mitigation. The scale in the risk table refers to a risk level which range from 1 to 4 as a result of multiplying severity and probability at the qualitative method risk analysis stage. The risk level is defined into 3 categories: low risk, medium risk, and high risk. Okay, next is about the type of the risk. First is economy risk. Unhealthy cash flow, it's 16 risk level. So about the mitigation is always impose the repayment obligation on time to creditor before other less urgent matters, and the strategy is avoid. And the second is the position of the rupiah exchange rate. The mitigation is by paying close attention to the economic situation through various macroeconomic indicator, including interest rate, inflation rate, currency exchange rates, and the stage is avoid. And the third is the level of public purchasing power. The mitigation company also continues to actively monitor the level of fluctuation in the price of construction, raw material, and various other components that affect the overall amount of operational costs. And the strategy is mitigate. And the second type of risk is operational risk. First is change in political situation, change in board of direction. And the mitigation risk is implementing SOP for the company so that the system can run well. Strategy is accept. And the second is change in regulation or law, condition at suppliers, condition regarding contract. The risk mitigation is always updated with law or other condition concerning company activity, and the strategy is accept. And the last is obstacle to system or physical asset due to disaster, natural or human error. And the risk mitigation is applying key threat properly and correctly. Strategy is mitigate. Next is the type of risk, political risk. First is change in the government political direction. The mitigation is always following and paying attention to the dynamic of change in government policy, and the status is mitigate. The second is delay in implementation of investment-related programs by the government. The mitigation is the company and establish proactive communication with policymaking institution through participation in association forum. This strategy is mitigate. And the next type of risk is competition risk. And the first is influence of the person of business rival in location that are close to the company business area. And the mitigate is the company has also take other initiatives such as efficiency measure, which effectively eliminate unnecessary costs. Strategy is avoid. And the second is growth of similar business line. Mitigation is company always pay full attention to the aspect of improving the quality of its human resource through the implementation of training program as well as measure to evaluate the reward and punishment system. Okay. And next is about currency risks. The type of risks. Fluctuation in foreign currency exchange rates with mitigation actively heading transaction against the rupiah exchange rate against the US dollar as well as for pound payable on by the company. And strategy is avoid credit risks. The possible loss due to the borrower failure to make payment on all types of debt, and the mitigation is by imposing penalties for late payment and cancellation of sales, provided that the company can take back the property concerned if the customer fails to pay the installment obligation. Needs avoid. And the type of risks, interest rate risks. Potential for investment loss that result from a change in interest rate. The company has a policy in terms of obtaining financing that will provide an appropriate mix of floating interest rate as well as fixed interest rate. This accept. And the next is liquidity risk. Now implementation liquidity risk management framework by maintaining sufficient cash and cash equivalent to meet the company commitment to normal operation. And the last is a capital risk, not maximizing return for shareholder. The company periodically review its capital structure.
And then the risk register. The risk register is a table that shows the result of the risk identification between the company and certain stakeholder. This table is intended to record all the risks that may occur, the result of the analysis, and how the company deals with this risk. Next. And for the risk identification, the first is economic risk. In the economic risk, there are three risks, namely unhealthy cash flow, the position of the rupiah exchange rates, and the level of public purchasing power. In the first risk, it causes failure to pay company debt with has 4 point for severity and probability with the high risk rating. In the risk mitigation, it always impose the prepayment obligatory on time to creditors before other less urgent matters and continuous type risk monitoring. And then next. And then this is operational risk with has three risks, namely change in the political situation, change the regulation or law condition at the supplier's condition regarding the contract, obstacle to the system, physical asset to the disaster. For the first risk, it has 1 point for the severity and 2 for the probability with the medium risk for the mitigation, namely implementation SOP for the company so that the system can run well. And then the mitigation from the number 2 is always update with the laws or other condition concerning company activities, and the last is applying the K3 properly and correctly. Next. And the third is political risk. There are two risks, namely change the government political direction and delay in the implementation investment related program by the government. And then the mitigation is always following the paying attention to be dynamic of change in the government policies and the company and establish proactive communication with the policy making institution through the participation in the association forum. And there are two competition risks, namely influence of the presence of the business rival in location that are close to the company business area and growth of similar business line. And for the mitigation is the first one is the company has also taken other initiative such as efficiency measure with the effectively limit unnecessary costs. And the second is company always pay full attention to the aspect of improving the quality of its human resource through the implementation of training program and well as measure to evaluate the reward and punishment system. Next. And then this is the currency risk. Fluctuations in foreign currency exchange rate, and the mitigation is actively hedging transaction against the rupiah exchange rate against the US dollar, and well as for bonds payable owned by the company. And then the credit risk is the possible losses due to the failure to make, and the mitigation by imposing penalties for the late payment and cancellation of sale profit that the company can take back the properly convert of if the customer fail to pay. Next. And this last is interest rate, liquidity, and the capital. Maybe we next. Maybe Laras will continue.
Okay, so now we're going to discuss about the good corporate governance. Next. So this is the GCG commitment. Good corporate governance is a collection of principles that underpin a legal and ethical procedure and management system. According to the Pakuwon Jati, implementing corporate governance is an integrated, consistent, and referring to the best standards with applicable requirement, has a substantial beneficial influence on overall performance. Balancing connection between the General Meeting of Shareholders, or RUPS, the Board of Commissioners, and the Boards of Directors becomes the essential components in GCG as a mechanism and patterns of interaction. Next. Okay, so this is the legal basis for the implementations of good corporate governance for Pakuwon Jati. Pakuwon Jati. Pakuwon Jati has compiled up corporate governance guidelines that refers to an in accordance with applicable laws and regulation, including the Law of Republic of Indonesia, number 40 of 2007, concerning limited liability companies, regulations of the Financial Service Authority, number 32 of 2014, concerning about the plan and implementations of the General Meeting of Shareholders of Open Companies, and etc. Next. Okay, so now for the corporate governance structure, according to GRI Standard 102. According to Law Number 40 of 2007 on limited liability companies, companies' corporate governance structures consist of two parts. The first one is internal organs of the company, which include the main organ, namely the general meeting of shareholders, board of commissioners, and boards of directors, and also supporting organs of the boards and boards of commissioners and board of directors, namely the audit committee, nomination and remuneration committee, corporate secretary, and internal audit unit. And the second part is external organs of the company that serve as external auditors. Next. Okay, so for the internal audit, according to the rules of applicable law and regulation, the following are the duties and responsibilities of Pakuwon Jati Internal Audit Unit. The first one is implementing an annual work plan. Second is carry out inspection in accordance with the company's internal control system. The third one is coordinate inspection activities with the president director on the achievement of goals and objectives of the company inspection. The fourth, prepare the audit report to be submitted to the president directors and the boards of commissioner and follow up the findings of the audit result. And the fifth is follow up audit findings reported by the internal audit section and consolidate with the audit committee to ensure that appropriate action has been taken and implemented by management. Next. So now for the company code of conduct. PT Pakuwon Jati has made a firm commitment to continuously implement GCG implementation in accordance with best practice and provision in applicable law or regulation. Conformity to the code of conduct is required for each individual in the company, including employees of the head office, business units, projects, and all the level of management, including board of directors and board commissioner, both as individually and as parties acting on behalf of the company. Next. So now is the whistleblowing system. The whistleblowing system is a violation reporting system that acts to express violation that occurs in the workplace, and it's carried out with the participation and active participation of all parts of the company. The implementation of the WBS is intended to eventually enhance all workers' compliance with the prevailing rules and policies. According to 2020 annual report of Pakuwon Jati, there were no reports of violation received by the company in 2020. Next. Okay, so now for the GCG recommendation. To improve the quality of GCG implementation in Pakuwon Jati, the author added some recommendations that companies can consider to strengthen the implementation of GCG, including the conduct a continuous and throughout self-assessment using the Open Corporate Government Guidelines issued by Otoritas Jasa Keuangan. Next is improving the implementations of whistleblowing system or WBS regulation. Next, hold refreshment session related to the good corporate governance guideline, both for the internals and external parties. Last but not least, continue to instill governance principles through integrated communication, discussion, and training. Next. So that's all for today. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh. Good morning, good afternoon, good evening.